Hey guys, my name is Max Convexity. Hope everyone's having a great day. Kind of a rainy day in Austin, cloudy and stuff. That's why I'm leaving on the background where it's pretty in the background. All right. Today I have a video called The Versatility of Straddle Strangle Swaps. I'm also thinking about calling it the Straddle Strangle Swap, or the ratio diagonal is the Swiss Army knife of option trading. All right. So first of all, okay, let's talk versatility. I really do want to make some points about how versatile the trade is, the straddle strangle swap. It could be a long, it can be short, it can do anything. But also, my station itself is trying to be somewhat versatile. I realize these option strategy videos aren't to everyone's liking. So I've been trying to do one general interest video like I did yesterday on an ETF, in between for every one video I do on option nerd stuff. But anyway, this is option nerd stuff today. So, but I have a really good video that I'm working on now that you guys will like. So it won't hurt my feelings if you don't watch this, because we're going to talk about options. But anyway, any event, if anyone wants to talk about options, will stick around. Okay. So definitely, yeah, of course, I'm not trying to alienate my audience. Panda called this trade the mullet trade that we're going to talk about today, which is the straddle strangle swap, and which is also called a ratio diagonal. You heard Jay and I mention it once, and you've heard me mention it in lots of live streams, but I haven't done that good of a video on it. I wanted to show some different things this time. Okay, so but the mullet's a good way to put it, because it's the reason it's business in the front is because the front is the near week or the near expiration, and that's just catching all that extrinsic premium. You're using that week to capture the extrinsic premium to pay for the long vol components in the back week. So that's why it's business in front, party in back. I wish I would have thought of that. Anyway. All right, yeah, this as far as versatility goes, it can be made to be long or short. The wings can be broken. This can be unbalanced. It can be ratio. It can be reverse ratioed. It can do any number of things. We're going to get in the option lab, and we're going to look at a trade or two. And the market's closed right now, but it's about ready to close, 255. But yeah, I love this trade. I thought I discovered it. That's another story. I thought it was free money. I mean, for a second. I mean, I know there's no such thing as free money, but sometimes I'll see something and I'll go, this has got to be it. I finally found it, right? Well, anyway. Okay, so, but I also wanted to talk about Max's two-step, because this little earning strategy that I'm paper trading is something that I like to do. And, but you have to understand about the ratio diagonal, the straddle strangle swap. So we're going to talk about them both at the same time. In fact, we're going to put on two Max's two-step trades in this video, and hopefully that'll help people to understand Max's two-step as well. All right, but yeah, this is based on statistical arbitrage. I'm trying to make a stat arb rules-based, system and I'm trying to outperform stuff like TRESS and ULTY. I'm trying to make a system that has those types of characteristics. So far, my system has done all right so far. It's only been around 2 weeks, so it's too early to tell. But anyway, but it's that type of system. It's a not for everybody system. It's a hedge fund type system. I think it's they call statistical arbitrage. People also call it pairs trading, and I think it's accurate to say pairs trading is a type of stat arb. In any event, this is pairs trading with options. So step one is the long vol component. And I have on a long vol component and a short vol component. It's basically a pairs trade. Just like in a pairs trade system, you might be long Apple, short Microsoft. Well, in mine, I'm going to be long volatility in 1 week and short volatility in another week, basically, and trying to make money, at the same time on the difference, so to speak. All right, so look at this. Let's look at, here's how it's been working so far. Come on. All right. So every week, first week to work marvelously. Ideally you have 4 long vol trades on and 4 short vol trades a week, and ideally they pay for each other. Typically the short vol is supposed to pay for the long vol trades, but in week 1 the short vol paid for the long vol paid for the short vol trades. In any event, I'm going to show you the week we're in. This week 2 wasn't such a good week. Oh, wait a second. Okay. So today we're going to do a step 2 short volatility trade in Meta because it has earnings this week. You do short volatility trades in stocks that have earnings this week. So we're going to do Meta and Ford because they have earnings after the bell tomorrow. But then we're going to put on a long volatility trade in AMD because they have earnings next week. All right. And for the sake of simulating, I put these trades on at the close every day. So I'm not trying to get a better feel or something. I just take the closing prices. Closing prices are a good way, in my opinion, to back test a system. So anyway, the market's about to close. So let's look in here. But also, I wanted to also drill down and talk about some of the things I said in that slide. In that slide, I talked about broken, unbalanced, different manners, different ratios. We're also going to go through that right now. Let's see, remove from stage. Okay, this is fun. This is so much better than Zoom. I can't even tell you. So, okay, share screen. Let's get in here and let's do this. We can also look, I have a step 2 Tesla trade on. We can also look at that. But for right now, let's do it. Let's build the meta short strategy. So here's how I do it. When I go to option strat, I always start the double diagonal. That's the simplest way to do the straddle strangle swap. We're going to do a short straddle strangle swap because it's on Meta. Meta has earnings this week, but then we're going to put a long strategy on AMD into next week. We're hoping the short volatility from Meta this week will offset the long volatility trade in AMD next week. Also, this trade will be expired Friday, so we'll only be long through the weekend. So some big event happens over the weekend that causes the market to be up or down 10 or 20% on Monday. We're in on that too, because we have that beautiful long volatility position on AMD. Or even if the volatility just goes up over the weekend, because something bad happens, volatility spikes 10%, boom, big winner on AMD. And we're also going to win, hopefully, on the short volatility ones. So let's get Meta here. Okay, so Meta, and then we have to pick our thing first. Then we go to double diagonal. This is the easiest way to build it because at the base, that's what a straddle strangle swap is a double diagonal, which is 2 short options in this week. And those are the options underneath the line, and 2 long options in the following week. Okay, so on Meta, what we're going to do, usually I just put the short options together because that's what a straddle, you're trying to swap the straddle and the strangle. It doesn't have to be that way. But typically I just go about like that. And then you look while you're doing it you look at the shape you're putting yourself in. So on this trade, you're saying in Meta that after earnings between now and Friday, you don't want it to be down more than 11% or up more than 14%. Anywhere in between there, and you should be fine on your short volatility trade. We're going to, as time passes, here's what it looks like now, but then they're going to announce earnings. Time's going to pass. But this is going to come in at the same time a little bit. Actually kind of hurt. But anyway, time's going to pass. That's going to come in. And then if it's like a no move, this thing can make a lot of money. But even if it's, even if it's like a move up 10%, that's pushing it. But there's still a shot to make a couple $100 even. Well, it depends. Up there, maybe not there, but if it was up 8.5%, you can make $424 between now and Friday. Anyway, easy peasy. That's step 2 trade. So all I do is I try not to over optimize. I take the fills I'm buying at the bid or ask. I buy at the worst price and sell at I'm selling for the lower price and buying for the higher price, just like you have to do in your retail. I'm not trying to get a good feel to make this system look better. It's in the settings to have that. So then I just had to save it like that. So then I just do this and I say step 2, and we'll watch how earnings happen. We'll watch and see how we do. Okay, so now speaking of that, I did this same thing 24 hours ago to Tesla. I made a Tesla step 2 trade. I did exactly what we just looked at, and I'm going to show you how it worked out. And the Tesla step 2 trade was to offset a step 1 trade that I have going on Boeing. Everything's a pair. The Boeing trade did not work out. I lost it was a long volatility trade. It ended up losing $150 or something. Okay. Right now, that Tesla short volatility trade's up $116. So let's take a look at it. Here is what it looks like. And it's the same trade that I just showed you. It's where you sell options in this week, you buy options in next week. This isn't the trust trade because it's not unbalanced. The short volatility trade is just buy one option next week, sell one option this week. That to me is a tip. Could be called a calendar spread. Could also be called a diagonal spread. It is a diagonal spread, but it could also be called a calendar spread. But in any event, I'm hoping right now you can see this is how you make money off of decay. All right, this is the profit loss graph. The profit loss graph is going to grow depending on where Tesla goes as time goes by. For the level Tesla's at, we're pretty much maxed out around $150. If this was real life money, I might just take that off and take whatever money that the trade's up $120. I'd probably just take it in real life. But it's just, I'm trying to test the system. So we'll just leave it on till Friday and take wherever it goes. And also it's important to remember, this is hedging those long volatility trades. So if the market gets even more super boring, these short volatility trades ought to pay off and help offset, because AMD is going to be losing money if vol keeps getting crushed and stuff. But if vol keeps getting crushed and stuff, these trades and this other short volatility trade I'm getting ready to do on Ford should be doing all right. It's all about statistical arbitrage. So now look at this. Let's do this real quick. Let's build a double diagonal in Ford. I'm going to do this super quick, trying to be more conscious of your time. Oh gosh, Ford may not be liquid enough. Ford's good if you have a small account because you can straddle, strangle, swap it for a lot cheaper. We'll do this. It's whatever. In real life, obviously, I'd be on Tasty Trade and I'd be trying to split the difference between the bid and the ask and get better fills. But I'm trying to see if I can have a profit system with edge, even getting filled at the worst price. And even if I can, I think I could probably do better in real life, but I'm gonna know I'm onto something. That's kind of so I'm just taking the worst price in the settings. Okay, so let's just do that. Let's see. Let's take a look at this. So this, if Ford makes a big move one day way or the other, we lose $30. And if Ford doesn't go anywhere, we make 60. Now I like to normalize this. The other ones, when we lose, I'm comfortable losing 300, 400, 500 or something. So let's make this let's see, we can hit link legs. And let's make this, let's do this. Let's do that about 5 times to make it more commensurate with the rest of maybe 10 times. So now we're in a lose 200 situation. If volatility comes out of the woodwork and whatever, and we're going to take this off before, Ford hasn't announced yet, but when Ford announces, which is tomorrow, we expect volatility to even collapse and hopefully their price not to move too far, even if their price moves super far down, because it says maybe it's going to move super far up because Tesla, because of something Elon said, and it's going to make Ford look better or something. Well, in that case, it's a lose $200 situation. and it's a chance to make about three or four times that. But realistically, even if we take it into Friday, at lunch, which is usually when I start looking to cover, you can realistically look for, it can go anywhere from down 6% to up 7% after earnings, and this trade will make money. So anyway, we're going to hit save trade. So this is our other step 2. I appreciate you guys for those of you that are still here for watching this. I have a lot of option traders in the house. I'd be happy to know. I can't wait to know how you guys do it. We'll get a live meeting going in Discord, and where we can talk back and forth, and you guys can give me ideas too. Anyway, I'm not saying this is the only way to do it or the best way to do it. It's just a way that I like and that I'm trying to test. All right. So that's step 2, save trade. Okay. Now we got to get a step 1 trade over the weekend. So in case something goes wrong over the weekend, because this system is an absolute return system. I want this system to outperform the market, and I think it will. To do that, I want to be long over the weekends. In the way this system, because that means anything bad that happens over the weekend or good that happens over the weekend, I'm in on. So in any event, I want, that's why also I'm trying to do this system. So if we want to be long over the weekend, we're going to get here. Let's get some AMD. I've already looked. They have earnings after the bell. I think it's Wednesday. There's a lot of good stocks with earnings next week. I mean, I wish I was doing this with real money. PayPal's next week. That'd be a great one to be long over the weekend in my opinion. Anyway, all right. I just got a text, but I'm going to return the text later. So I promise this video is just about over. I'm going to wrap it up after we do this long volatility trade. So we do a double diagonal. And the next time I get down here, I'm going to show you guys how to do it in Tasty Trade. It's more complicated and more involved, and it's easier to show you this way, and you can visually see the payout better than you can on Tasty Trade. Okay, so we're doing the long double die. So this is a step 1. So I'd start the same way. I'm going to sell the straddle, which is the at the money, put and call. Boom, 152. So wrong week. Remember, this is because AMD has earnings next week, so we don't want it to expire this week. That's not going to help us. Yeah, we need it to expire next week. So we're going to sell the 152 for 7, the 152.5 for 7, the other one for 665, right? And we're going to bring that money in. Okay. And if it was a short volatility trade, it'd probably look about like that, something. But, oops, wait, hang on a second. I need to unlink the legs. Okay. So here we have AMD. And then what I do is I sometimes, after I put it together, that's why I like option strat so much. This thing's pretty powerful for being free. I normalize it for making the valley of death. And the value of death can change, and I realize all that. It will change as the volatility changes, but other things being equal, if the volatility doesn't change, blah, 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 I normalize it for the kind of valley of death I want, okay? So, in other words, and that's what I was saying about the versatility of this. If I'm, you can, depending on what you think about which way the stock's going, you can make it where there's no valley of death to the upside, only valley of death to the downside. And this is a good theta positive trade too. Look, because if you do this, if you put on this, even though it's a long volatility trade, if the market goes nowhere, this will show a profit. And also if the market gows up just a tiny bit, it shows a profit, or down, anyway, so that you can do that. The straddle strangle swap is just so versatile. You can take off the long legs, and you've already done that, and turn it into a short volatility trade, just by turning those from 2s to 1s. But you can also break the wings. Watch this. Well, let's do this. We'll do the broken wing demo some other time. You guys have stuck with me long enough. We'll do that. But suffice to say, this is like the Swiss Army knife. You can make this thing do just about any payoff diagram that you can think of in your head. You can accomplish with the straddle strangle swap. You can make it kind of like an iron condor, kind of like a de facto iron condor. Anyway, All right, guys. Like I say, I appreciate you guys. Let's do this. Let's save this one. Then hopefully you guys like the series, and we'll look back next Wednesday in AMD. We'll be looking at AMD, and hopefully by next Wednesday, this trade will be up a couple $100 because AMD's volatility will be up. So once again, one more time, let me show this one more time. The reason this is called considered long volatility, back to editor. It's not only because you can make money if the market goes up or down. I mean, that's it too. But it's because literally if implied volatility goes up, it makes the trade where it won't lose money, or it makes the trade if you're making money, even if you're making money as implied volatility goes up, you're making more money. It's a tailwind. It's convexity. That's the whole shit when you're trading options is trying to get the tailwind from convexity. You want max convexity. Always want max convexity on your side if at all possible. Okay. In any event, should be interesting to see what happens with AMD. So, and we'll update the spreadsheet and all that kind of good stuff later. You guys are with me. Let's take a real quick early look at the buffer report. You guys stuck with me this long. Well, anyway, you aren't going to see this till later, so it doesn't really make much sense, does it? I'm not doing this live. All right, guys. Well, I'm going to let you guys go. Let's look at the slides, though, and see if I have any more slides that I want to discuss. All right. Yeah, it's easy to switch from step 1 to step 2, and you guys saw that. I wanted to make sure I demonstrate that. You just have to go from 2 lots to 1 lot. Or, whatever size you trade, maybe you're shorting 5 and longing 10, but, you could do it in different ratios. I do 1 to 2. You can also do 2 to 3, a 2 to 3 ratio, and it's a little bit less aggressive and it's more income focused. We'll talk about that someday too. That's one of the other ways you can vary the ratio on these things. I mean, the whole idea of step 1 and step 2 is I wanted to be long Tesla when it behooved me. Last week I put on a step 1 Tesla trade. It didn't really make any money, but it was step 1 all the way until yesterday, right before the bell, and then all we did was take off those long legs. Now it's step 2, and it looks like step 2 is going to make money. Basically, the idea is the step 2 trades are earning time decay. They're earning extrinsic, and they're the ones with the huge advantage in your favor, and they're supposed to be paying for the protection we're getting out of the long trades out of the extra long options in the Straddle Strangle swap. I started looking into StatArt a couple of years ago, and it got me going down the road of pairs trading, and then it got me going down the road of systematic trading. That's what I'm trying to discover, a systematic StatArt strategy that's easy and makes lots of money. So if you guys know of one of those, let me know. But anyway, no, it's part of the fun of this thing is the journey. I've been trying to achieve financial alchemy my whole life. I think a lot of people are, but what I'm looking for is a trade where you get risk, but you don't have, you get reward, but you don't have any risk. Or somehow a trade that can be long and short at the same time. That's how I got to the Straddle Strangle swap. Or a trade that could be long continuously, but only when the market's going up. I want to be long, but only on up days. On down days, so I showed you that thing, T-Jewel, that ETF, and they're kind of refining some of the laws, but, that's, but it's close. I mean, T-Jewel's getting closer to financial alchemy than we've been in a long time. T-Jewel and callers and cover call funds and buffer. It's just a great time to be an investor. You have so many more choices than you had before. And I'm serious. I'm going to figure this out. What I think it involves, I think there's a combination somewhere that professionals know, and that they're doing their own account. And I think you can put on like a calendar, maybe in one time frame at the same time as maybe some type of ratio trade in another time frame, and be long and short in different time frames, and do it in the right ratio where you can't lose money. I know there's some magic ratio type strategy type spread. I'm trying to find it. My good friend Echo Eversky is trying to find it. He may be closer than I am. But anyway, this video is kind of intended for Echo and Charles and some of the option traders out there, Brad. And I have a lot of really good option traders that watch this channel anyway. So I'm also, like I say, part of it's the journey. I'm also trying to learn. I'd be interested to hear what you guys say. What do you guys think? I have it wrong? Did, you know, or do you have, I mean, I'm sure there's better ways to do it. I mean, I'm not so sure the way Aldi is trying to do basically the same thing isn't the best way to do it. And that's just put some money together and do a covered call fund on the most high volatility stocks there are. I mean, that's similar to the type of strategy I'm trying to do. That's the reason I'm choosing earnings stocks, because I'm going after the high volatility. But instead of just high volatility, I'm going after the change in volatility, where it's an earnings and then we put a step 2 on the night or the day before. It's going to go from high vol to low vol, hopefully take advantage of that. And then the week before, hopefully, you know, as we get closer to earnings, sometimes excitement happens. The Tesla trade, the long vol didn't make any money, but you saw that 1 week, the long volatility trades did good. It just depends on what VIX is doing. 2 days, VIX is being crushed. So the long volatility trades in this strategy are doing poor. Anyway, we'll see how Meta and Ford help offset AMD. And I think we have another long volatility one. I forgot what it was. Anyway, we'll see how they all work. And hopefully we'll have an update probably Friday, a real quick check in. And like I say, you guys will be able to say you knew me someday. Someday there'll be a freaking hedge fund called the Max Convexity 2-step hedge fund. I don't know. Anyway, all right, guys, we'll figure it out together. You guys have a good day.